And most investors stick to US stocks and index funds due to their size, stability, and globally recognized brands and companies. But have you ever considered looking for opportunities across the Atlantic? If you have, I hope this video will help you navigate the at times messy and tricky European stock market. Welcome back to another video. Hope you'll enjoy this one on Europe. If you do, please drop a comment, press the like button and hit subscribe and the notification bell if you want to see more videos. I do put a lot of work into these and research, so I appreciate all the support I can get. I'll be adding timestamps in the video, so jump ahead to any part you're interested in. Stocks, the economy, ETFs, index funds, whatever it might be, and hope you enjoy. Now, the European Union, not to be confused with the continent of Europe, actually boasts a huge economy of $18.7 trillion in annual GDP. And if it was a country, it would be second only behalf the US's 21.4 trillion, But this is not really reflected in the size of the European stock market, which is still quite small compared to the US. And the 5 largest exchanges only account for about 13.2 trillion compared to the US's 34 trillion. And so this will mean that it is a less explored stock market with less international money coming in, because most investors still see the US and the US dollar as the primary safe haven for foreign investors. So when investors from the Middle East or Asia, for example, are looking for stocks, they mostly look to the US, not just because of the stock market, but also because of the US dollar. And due to its slow GDP growth, lack of fiscal stimulus, currency stability, and the very, very tough competition from the big US companies, the European stocks have traditionally traded at a discount to the US, meaning they're technically cheaper and have low PE ratios. This means there are pockets of value that you can find as an investor and make money on it. But be warned, the European stock market have struggled coming back in the past from financial crisis, like the one we had in 2007 and 08, and the one we're going through now. So the stocks all have a low PE ratio for a reason, and it's not certain that the share price will come around. And as you might have guessed, the European stock market has massively underperformed the US, and the European index is currently sitting at its 1998 level. So if you invested then, you would have made no money until today besides dividend, while the US's S&P 500 is up 180%. So that's the difference over the last 22 years. And the Euro Stoxx 50 index reached its peak back before the financial crisis of 5,200 and is currently sitting at 3,166. So 13 years later, the best index has yet to recover. Now, this might scare some investors away, but if the indexes don't look attractive to you because of all the sideways up and down, you can still find individual companies that will suit your needs. Now, there are also other reasons to look overseas. As we talked about, Europe offers cheaper stocks, exposure to the euro, a less explored stock market, less competition internally, higher dividend, and emerging economies, especially in the East. And if you're a European investor, you will probably have more inside knowledge of what's going on in your country or in Europe in general than an outside investor, which is a big advantage you should take with you. Now, the largest economies in Europe are obviously Germany, UK, and France, respectively. So any index fund or ETF will mainly hold companies from these countries, and as well as some Netherlands, Dutch, and Swiss companies. So the biggest index is Vanguard's FTSE Europe ETF, and it holds 25% UK, 15% France, and 14% Germany. But since Europe is quite a fragmented continent compared to the US, some countries have stronger traditions in certain industries and sectors than others. So most banks are UK and Swiss, the big fashion companies are French, of course, the big heavy manufacturing and automakers are in Germany, Denmark has strong healthcare companies, then you've got Norway with their oil and shipping companies, So there will be one or two big companies in there. That is pretty much the only big company from that country. But some countries are just really good at some things. That's basically what I'm trying to say. Now, speaking of companies, here are the biggest ones in Europe. You've got Royal Dutch, Nestle, Novartis, Roche, Anheuser-Busch, Unilever, Louis Vuitton, HSBC, L'Oreal, BP, Total, SAP, and Novo Nordisk. A quite more diversified list than the almost exclusively tech-orientated US's top list. Over there, almost all of the big companies are tech. Here you've got mostly healthcare, energy, and consumer goods. But worth noticing is that the consumer good companies basically sell all sorts of everyday items, or items you buy from the store. So they're not all doing the same thing. And the energy companies are like Total and Royal Dutch are mostly oil centered. So that's worth noting. Now, the problem is that most of these companies are growing at a much slower pace than the US. The average growth rate of the top 10 US companies is around 12% annual revenue growth, and the top 10 for Europe is sitting at 4%. So, there's a lot of less growth to pick from. Now, if I had to choose from this list, I would probably look at Louis Vuitton, SAP, Novartis, or Novo Nordisk. Now, the reason for this is I think the healthcare companies in Europe pretty much have the European market on lockdown. Not much competition from the US. And it's an industry never short of innovation and organic growth because of population growth and new diseases like corona. And Louis Vuitton, for example, basically owns the luxury apparel market, and they're consolidating their power. And that is a very stable market that is pretty much immune to economic downturns. And SAP from Germany is pretty much the only European tech giant which might carry with it some advantages, because they will have stronger bonds and a stronger position in Europe. Now, I know all of the US tech companies are much more exciting, but this is the only European tech giants, and I think that is worth something. Right, now to the exciting part of the video. Now, I took actually the time to dig up some companies I think you might want to have a look at. These companies show promise, growth, contrary to the big oil and finance companies. Now, I'll throw in some dividend ones as well for those dividend hunters out there. But keep in mind, I'm not personally recommending these stocks. I'm just saying, of the companies I know about, these are the cool ones. Volvo AB, it's not Tesla, but I think it's the second coolest car play. Luxottica basically owns the luxury sunglass market. Check out, they've got brands like Dolce & Gabbana, Michael Kors, Oakley, Versace, Ralph Lauren, Ray-Ban, and Burberry. You've got Puma, which is obviously the German, globally recognized sport and casual wear clothing brand. You got Bayer AG / Sanofi SA. They're two big diversified healthcare and pharmaceutical companies. As I said, they pay good dividend. Their stocks are kind of slow moving, but it is an industry where you'll have more than enough organic growth over the years with aging populations, for example. Then you've got Airbus, which is the second half of the commercial jet duopoly together with Boeing. They're also a defense company, obviously. You got GW Pharmaceuticals. They're developing cannabinoid medicines and other pharmaceutical products, so basically like a pot stock. You got DNB, the largest bank in Norway. They also pay a super hefty dividend of like between 4 and 5% usually, and Norway is one of the most stable economies in Europe. Zalando is the biggest online clothing store in Europe. Don't quote me on that, but I'm pretty sure. It's a German online clothing store, and their sales are surging. You got CD Projekt Red, which is the studio behind the Witcher games and the upcoming Cyberpunk game. This is a Polish studio, if I'm not mistaken. It's a bit tough to get your holds on shares, But I know that Saxo Bank, for example, offers trading in Poland and the Warsaw Stock Exchange. Ferrari, well, it's Ferrari. Logitech, a tech hardware and peripherals manufacturer. So now that everyone's working from home, that could be a good play. You got SAP, which is, as I said, the only European tech giant. Spotify, well, we all know Spotify, right? And Games Workshop, which is the owner of the Warhammer license. So the little figurines you paint and the popular strategy games and maybe upcoming movies, who knows? This is a British shop. Stock is on fire. This is a really exciting one. So there you got some big, some small, some tech, some dividend, a little bit of everything. Let me know what you think of this list. There are some really exciting opportunities here, especially Louis Vuitton, Games Workshop, maybe Spotify, CD Projekt Red. A lot of potential growth here. Now, as far as ETFs go, Europe is widely covered with numerous of funds you can choose from. And this is the way most investors play Europe. Now, overall, these ETFs demand a higher expense ratio but pay more dividend. Now, this is a list of the biggest ETFs. Now, their holdings are mostly going to consist of Nestlé, Roche, Novartis, AstraZeneca, ASML, Unilever, SAP, Royal Dutch, Novo Nordisk, Sanofi, a mix of those companies. So the general ones are Vanguard's FTSE Europe, JP Morgan Beta Builders, iShares Eurozone, you got International Select Dividend from iShares, then you got iShares MSCI Core Europe. I would probably go with one of the ones only charging 0.9 expense ratio. I think 0.49 is way too much, and the dividend is very solid across all of these ETFs. Then we got some more specific ETFs. iShares actually offers ETFs for Germany, UK, Switzerland, France, Netherlands, Italy, Sweden, and Russia. So whichever of those countries you want to hone in on, those are the ETFs for you. Then we got some other specific ones. You've got one for financials, one for small cap dividend, select dividend, small cap, Nordic region, financials, small cap dividend, select dividend, small cap, and then you've got the Nordic regions. So those are the more specific ones I could find. When you start going lower than this, the ETFs become very small and obscure. So I would most likely stick to the broad ones or one of the more specific ones like dividend, small cap, or maybe the Nordic region. So I think investing in Europe can be a great idea, especially through ETFs. I think it's a good idea because of the diversification it offers, the dividend, the low multiples, and the currency hedging. I think these reasons should make any investor at least have a second look at Europe if you haven't already. And the suppressed prices and the sideways trading can erupt upwards if we get a solid recovery after this crisis and some of the southern countries picks up their economies. Now, although I'm not personally invested in Europe at the moment, I've had a look at Luxottica, Louis Vuitton, Airbus, Spotify, Games Workshop, and CD Projekt Red in the past. Those are all players I think can coexist with their US counterparts. Because let's face it, most of the global economy and money flows to the US because the companies are, very cutthroat, innovative, and they're huge. So the competition from US is a problem for the European companies. So I would try to dance around the tough competition from the US. So I can't wait to read your suggestions or your European holdings. Hope you learned something, but most importantly of all, that I'll see you in my next video. See you guys.